Welcome back. I'm Pratap here. Today is 3rd November 2023. In this video, I'm generating demand and supply zones for both weekly time frame and also daily time frame. So I'm providing the timestamps in the video description. So if you click on the timestamp, you can directly go to either daily zones section or weekly zones section. I'm also generating Nifty 50 and Nifty Bank supply demand zone chain as requested by one of our members. I will also provide a timestamp for that section in the video description. But before we get into this demand and supply zone generation, let us quickly evaluate the high liquidity zones near demand and supply zones from our yesterday's report. Because there are good number of stocks, I put them in the watch list. Let us look into all the stocks one by one. The first one is HDFCAMC. Already we got entries for the last 2 days. Even today also we got the entry for this stock. Because yesterday it was near the demand zone, so we got an entry in the demand zone itself. We found one fresh 15 minutes demand zone. The price did not reach into 75 minutes demand zone. Let me go to the 75 minutes time frame. This is that 75 minutes time frame. So the price did not reach into the 75 minutes time frame. Instead, there is a fresh 15 minutes demand zone. So let us go to the 15 minutes time frame. Here we found one drop, base and a rally candle. And we fine-tuned this demand zone near to our high liquidity zone, because this is the strategy we always employ to minimize the risk and also to verify the price is entered into the high liquidity zone. So it entered into this zone and then it reached the supply zone. Actually, the move is between daily high liquidity zone and daily high liquidity supply zone. I mean, daily high liquidity demand zone and high liquidity supply zone. The entire move happened within this one day itself. Do you know how much profit it has given from daily demand zone to daily supply zone? Because both are high liquidity zones. For HDFC asset management stock, the demand zone is a high liquidity zone and supply zone is also high liquidity zone. The same thing we discussed even yesterday also. So it has given a profit 13,560 rupees, which is better than yesterday's profit and the day before yesterday's profit. Do you know the return on the investment? 8.27% return on the investment. So it's excellent. But unfortunately, we would not have taken this trade. If anybody would have risked and took this trade, if you are taking this trade, this is an aggressive trade. I didn't suggest the strategy for the aggressive trades. I already suggested a safe strategy. What is the safe strategy? You have to, from our zones are daily zones. So you have to go one time frame below. What is one time frame below? That is 75 minutes. So that should be a fresh zone. See here, this is a fresh zone. Drop, base, a rally candle. And price did not reach into this zone so far. That's why it is a fresh zone. So you can fine tune this 75 minutes. You can go to 15 minutes or 5 minutes. You can fine tune this 75 minute zone to minimize the risk. So as per our safe strategy, you would not have got entry in this today. But those who have taken aggressive trades, they would have got an entry and they got excellent profit. Why we are not going for this aggressive approach? Most of the times, remember I'm stressing on the word most of the times. Most of the times, these 15-minute zones, the independent 15-minute zones or 5-minute zones, which are not part of this 75-minute zone, most of the time, these independent 15 minutes and 5-minute zone will fail unless they are also high liquidity zones. If they are high liquidity zones, yes, they work. But this is not a high liquidity zone. Which one? This 15 minutes. It is a fresh zone, no doubt in that. But most of the time, what happens? Price go below further and then reach 75 minutes, and from there it will push up. But maybe the liquidity in this zone is high. Maybe institutions might have kept more pending orders here because it moved with a gap. It moved with a gap, a professional gap. So that's why most of this gap, between the gap, most of the supply is consumed. So by the time it reached, prices reached into this demand zone, this 15 minutes fresh demand zone, most of the supply might have been consumed. That is the reason why the pending orders in this demand zone pushed up. Because the supply is consumed within this professional gap, see the price, how it pushed. There is no supply. Everything is consumed here in this area, within this professional gap area. So that way, by doing, if you would have done this analysis, definitely you would have taken this trade. Even though this is an aggressive trade, you would have taken this trade here. But why I didn't suggest this approach is most of the times these zones will fail. I don't want your trades to be stopped out. That's why I identified a safe approach. Because of this safe approach, sometimes you miss the trades. See, today, you missed the trade. Price didn't get into this 75 minutes. But those who are having experience definitely would have taken this trade because there is a professional gap, and clearly we are seeing most of the supply is consumed within this professional gap area. Now supply is weakened and now it is entered into the demand, the pending orders pushed the price. Because there is no supply, easily prices went. See what time we got the entry. At 12 o'clock we got the entry. What time it reached the target? At 13:15 it reached the target. That means within 1 hour or 1 hour 15 minutes time frame, time period, we got 13,560 profit, which is 8.27% return on the investment. Our average return on the investment is only 6.1% during the intraday. But it gave that too, the 6.1 we get within 2 to 3 hours time period. But 1 hour itself we got 8.27% because the supply is consumed within this professional gap area. So if you would have observed this price action, definitely you would have taken an entry in this zone. But not as per our strategy. Our high liquidity strategy, I have explained to you. And this trade is mainly for experienced people who have fair idea about demand and supply zone and price action together and what happens within the professional gap areas, how the supply is consumed if the professional gap is related to demand zone. By considering all these factors, you will take an aggressive trade. But those who are learning and probably those who are having maybe 4 to 5 years of experience in supply and demand zones, probably they may not be having idea about all these concepts. But slowly you will understand all these concepts one by one. I've been explaining during my videos. I'm giving several examples by analyzing all these charts. That way you get some knowledge. In future, once you get better understanding about this price action, then you will be in a position to take your own decision. But for me, it is a successful trade today. But for you, you did not get the entry. This is the point you have to observe. But why I am explaining reason number one, you should also understand such kind of concepts. That is point number one. And point number two, always I am giving explanation because to make you understand the power of the high liquidity zones generated by our NeoStock software. Because I developed the software, obviously I should tell the public the power of this software. Because we know, we have seen so many softwares, they are developed by the foreign people. TradingView or MetaStock or maybe Advanced Get software, all these known softwares, they're all developed by the foreign people. But none of those foreign people are not yet developed the supply and demand zone related software. So being an Indian, I'm feeling proud because we developed. I always think, I am thinking better than these foreigners who developed these softwares. So obviously I feel proud as an Indian. So I want the public should know what kind of software we are also developing, what kind of capabilities we are also having. I want everybody should know. That is the reason why I am providing this free training for demand and supply zones. And every day I am giving you the free reports to the public. Hope you understand why I am doing all these services with free of cost. Okay, now I don't want to talk much about myself and my achievements because generally I don't like that, but today the situation has come, so I talked about it. So let us get into our discussion. So this is about HDFC asset management. So the return it has given is 13,560, which is 8.27% return on the investment. So as per me, it is a successful trade, but as per you, you did not get the entry because you always look into a fresh 75 minutes zone inside the high liquidity zone. You have to follow this strategy. You should not take deviations. You should not get tempted with some of these independent 15 minutes and 5-minute zones which are not part of the 75 minutes. Because most of the time they will be stopped out, most of these zones. But today's scenario is different. So this is about HDFC. The next one is L&T Mindtree. So let's go to the daily time frame. So yesterday it was near to the demand zone, but it didn't reach the demand zone. We didn't get an entry. Let's move on to India Mart. India Mart, see the rejections just before this. We already discussed about entry buffer concept. So there could have been some entry buffer here. Or you may find lower time frames, probably 5 minutes or 15 minutes. Definitely you will find some zone. That zone is acting as an entry buffer. Even if you don't find the entry buffer, any zone, still you can draw a horizontal line here and you can treat that as an entry buffer. Once the entry buffer is broken and price enters into this fresh 75 minutes demand zone, I have already identified two fresh 75 minute zones inside. So definitely it will give a very good return. Because by the time prices enters into this demand zone, the supply definitely would have been consumed by this entry buffer. That means by the time prices reaches into this demand zone, 75 minutes demand zone, the supply is weakened and definitely the pending orders in this demand zone will push the prices up. That is what we have seen today in HDFCAMC, right? The same thing will happen here also. But today we didn't get the entry. The reason is because of entry buffer. The next one is Balakrishna Industries. This is a short trade. And most of these candles are consumed this institutional pending orders. I didn't find any fresh 75 minute zones inside. I'm sure next time easily prices will go and violate this supply zone. So I'm not suggesting the trade unless next time when again prices reached here, if institutes creates a new 75-minute supply zone and push the price down, then next time in the retracement we will get the entry. But as on now, we don't have an entry in this zone, and if institutions don't create a new supply inside this, definitely this high liquidity zone will be broken. Several times I explained this concept, but still I am repeating again and again. The reason is you should not forget this concept. Second thing is new subscribers keep on adding. At least they should also should land. These are the two reasons why I'm again and again repeating these points. Next one is Bank of Baroda. We got a short trade here, and I will get into this stock after completing the remaining things, because we have a very good landing here, and that is the main discussion for our today's topic. So you are going to learn some interesting points. This is not only high liquidity zones point of view, your normal supply and demand zone, whatever the concepts you learned, sometimes you might have observed your zone is failed. You don't know the reason why the zone is failed. The failure, most of the times the failures, what could be the reason? That I am going to explain in this talk. So it's a very important concept. So after completing the remaining stocks, I will get into this. And Cipla, short trade, we did not get. So here I identified a fresh 75 minutes and I fine-tuned to 5 minutes or 15 minutes, something I fine-tuned. Okay, and ICICIGI, one interesting observation. This is already tested. It is already tested here. Some rejections are coming. Probably there could be some pending orders. But anyway, we found a 75-minute zone here. And inside, I found the origin for this entire 75 zone. In 5 minutes, I identified. Did you hear this concept? Previously also we discussed. Yesterday, day before yesterday also we discussed. Look into HDFC AMC. Let me compare this 5 minutes chart with HDFC AMC. Both are looking almost similar. But HDFC AMC, the price action happened, but here the price action is about to happen. First, let me go to the 5 minutes. And even before that, 75 minutes, we have a rally, base, and drop. Inside that, I have fine-tuned at 5 minutes level. There I found the origin of this entire zone. This is 15 minutes. 15 minutes, see, you don't have clarity. Same thing we have observed even HDFC AMC also. 15 minutes, we have, these two candles are looking like a pivot. There is no base. Same thing we observed even HDFC AMC on 15 minutes. Let me show you. This is HDFC AMC. We are talking about this supply zone. 15 minutes, we don't have any clarity here. We didn't find any supply zone in HDFC AMC as well. Same thing in ICICIGI, right? So we have a rally candle, drop candle without a base. Now go to the 5 minutes. Now you can find the origin, actual origin. And this is the origin. We have a beautiful rally, base, and drop. And see the rejections here. Prices are moving and It moved up and again came back. See the rejection, first rejection in this candle, second rejection in this candle. Same thing you can observe in HDFC AMC as well. Look into HDFC AMC. So let me open a new chart. Otherwise, it's difficult to compare. So here I am opening HDFC AMC. Let me move on to the 5 minutes. Yeah, here we have HDFC AMC, we have a rally base drop. Look into ICICIGI. We have a rally base drop, and this is the origin for this entire 75 minutes. Same is the case. Oops. This is ICICIGI and this is also ICICIGI. I'm sorry. Let me click on HDFC AMC. Okay. I'm sorry. Here also we have a rally base drop. And here also we have a rally base drop. And here you see after that rejections. That's why I have drawn a blue color line. From these rejections, prices are coming down. That means between this 5-minute zone and the blue color line, there are so many institutional pending orders. That is what entry buffer concept. The entry buffer concept is nothing but the similar thing. And here so many pending orders. By the time all these pending orders consume, your demand is weakened because this is a supply zone. Demand is weakened, and by the time prices enters into this zone, it push the price down, the existing pending supply orders. That is what happened recently here. That's why we got a very good profit during that session for the short trade. Again, second time. This is the first time we got day before yesterday. Day before yesterday video, I explained next time also it will work very well. See, next time also happened yesterday session. And today prices did not reach up to this because they were moving from demand. Probably tomorrow, probably again, we don't know, we may get one more success. And this has become a high liquidity zone at 5 minutes level. So it supports multiple entries. Now observe, here also there are rejections. First time, price pushed down. Second time, just a little crossed above this blue color line. Again the orders pushed. Third time it is yet to reach. Probably it may come in the coming days. We are waiting for that. But look into the structure of this zone with the HDFC AMC. They are almost looking similar. Here already price action is happened. But here price action is yet to happen. The exact similarities. And what we can understand based on this, an important lesson you have to understand. Finding the origin of the move in a zone is very, very important. You always look into a daily time frame or 75 minutes time frame. Okay, there is a demand zone. It is low on the curve. The odd enhancer score is excellent. So let me go and buy. Don't think like that. That is at the beginning level you have to. But if you want to become, you have to think like a professional. Supply and demand zone, professional trader, if you want to think, you need to find the origin. How can you find the origin? By doing top-down analysis. So go one go one time frame below, that is 75 minutes level. Check if there is any 75 minutes horizon is there. Now again go inside 75 minutes. Check there is any 15 minutes horizon is there. If not 15 minutes, 5 minutes horizon is there. See, in both these charts, we found the 5 minutes horizon. This 5 minutes horizon is the main source for this entire 75 minute zone. Exactly the same thing. Even HDFC AMC also, same thing happened. This 5 minutes horizon is the main source for this entire 75 minute zone. That means horizon tells where the real pending orders are there. And before that horizon, if there is any entry buffer, then your trades works even much better. It will give multiple trading opportunities. See, the first time price pushed, second time price pushed it down, third time price pushed it down. You got a good target here. Now this is the fourth time, and this is the fifth time. Fourth time just about to enter into this supply zone. Fifth time it went into this supply zone. Maybe next time, maybe it may go even more deep into this supply zone. So definitely it will take a lot of time to consume all these pending orders. So such kind of observation you have to make to get success in your trading. Don't mug up the concepts told by some people. Whatever the concepts they told, you take them as a reference. Please remember, these concepts are developed somewhere in the year 2007 and 2008 time period. Still, if you are following the same as it is, I don't think you will get success. Because so many strategies are developed later on. So many new things are identified. Institutions are playing even more smart. The reason is retail traders like us, we learn these concepts. We are trying to follow their footsteps. And if our orders are getting executed before their pending orders, so probably their calculations may not work. They need to wait for a long period. Again, they should push the price again once again to that particular zone. So for that, they are also changing their strategies. They are also trying to trap us by following different techniques. But still we can understand how exactly they are thinking. If you do a proper analysis on the charts, because what institutions are doing, everything will be reflected on the chart. They can't hide it. Their actions always reflect on the chart. But your way of thinking also should be changed. You should be thinking in a modernized way, not the same way in 2007 or 2008 or 2009 during those years, how these concepts are developed, not in the same way. That's why keenly you should observe the price action. You should compare several charts. See, this is a simple comparison. Because we've been following this chart, HDFC AMC, for the last 3 days, and all of a sudden, when I looked into this ICICIGI, I felt this is almost the price action in this chart is happening similar to what we have seen here. There are rejections from here. Here also rejections. I already introduced a concept called entry buffer concept. It is supporting that concept. The moment price enters into this entry buffer, and if our risk management permits, we can take an entry here itself instead of price enters into this proximal line of the supply zone. So this is one point, one interesting learning from this ICICIGI, but otherwise we did not get the trade today. And the next one is ICICI Prudential. Here also I have fine-tuned a 75 minutes demand zone, a fresh 75 minutes demand zone, and prices are yet to reach into this fresh 75 minutes zone. And Indigo. See here, another important, one more learning. Why I am always saying a fresh 75 minutes inside this daily high liquidity zone? This is a classical example today. This fresh 75 minutes is not a high liquidity zone. It is a normal supply zone, but it got some importance because it is there inside the daily high liquidity zone. That's why a fresh zone always we get success. This last Tuesday, we got an entry. During that intraday, we got a very good success on that day. Those who have waited for one more day, that is a short-term trading, you got even better, almost double the profit what we compared to what we got during the intraday. Intraday itself, we got a very good profit on that day. Now see what happened? Because it is already tested this 75-minute zone, now easily it passed. Because this is not a fresh zone, we have identified one more fresh 75-minute zone, and I fine-tuned at 5 minutes or 15 minutes. There I found an origin here. Actually, we have to delete this zone the moment it tested, but I want to show you what will happen if a 75-minute zone is already tested inside the high liquidity zone. See, we are not deviating the fundamental principle. What is the fundamental principle? We have to trade on a fresh zone. We are not deviating that. But what is the point we are learning a new point? The daily time frame is not a fresh zone. It is a tested zones. The daily time frame. Why it is tested? Because it is a high liquidity zone. Inside that high liquidity zone, institutions keep on creating 75-minute zones or 15-minute zones. And that is giving an impression to you that a daily zone is a fresh zone. Why institutions are doing like this? Because they know some 10 years or 15 years back, whatever the concepts they developed, even today we are using exactly the same. What is our mindset? If it is not a fresh zone, we don't look into that zone. We don't take any trades. We don't place any orders. Institutions, they know that point. So they don't want to get any disturbance from the retail traders. Because they want their order should be executed. If each and every retail trader, if they are keeping their orders just before institutional pending orders, what will happen? Our orders will be executed first. Later institutions' orders. So we are preventing to reach institutions' targets. Maybe institutions wants to execute 1 lakh orders. Retail traders placed, our orders are about 10,000, say let us assume. Because of the 10,000 orders we placed, their pending orders are not executing as per their expectations. That means we are disturbing in reaching their targets. That's why what they are doing, they are identifying some high liquidity zones. Some zones they are deciding. There again and again they are creating new fresh 75-minute zones. Because when if anybody is looking that daily zone, they feel it is already a tested zone. We don't enter into that zone. Because we are not entering into that zone, institutions are not getting any disturbance. This is the point you have to understand. This is how institutions' mindsets are changed. But my software algorithm is identifying such kind of zones. That is a different story. That's why I defined a strategy. The strategy is, my strategy also thinking exactly like institutions' present mindset. So we are looking for a fresh zone only, not in the daily time frame, but in the 75 minutes time frame. That's why I framed a rule. What is the rule? High liquidity zone should be used as a HTF zone, higher time frame zone, not our LTF zone, your lower time frame or entry time frame, whatever you call. Our entry time frame is one time frame below. If you want to further fine tune, one more time frame below, that is 15 minutes or 5 minutes. That is inside the 75 minutes. You might be knowing the concept zone confluence. One higher time frame zone should be, lower time frame zone should be inside the higher time frame zone. So exactly we are applying that zone confluence concept and fine tuning the zones at our risk management level, and we are trading. So please understand this concept properly. Hope you understand, right? Okay, this is about Indigo. Next, Polycab, and we did not get an entry today in this. And next one is Ultratech Cement. Ultratech Cement is already tested, went deep. We didn't find any fresh zones, and here also we didn't find a proper fresh zone. It looks like 75 minutes is looking like a fresh, but when we look into 15 minutes and 5 minutes, they were already tested. So until this blue color line, whatever I have drawn, below that there is no fresh. Only in this small area you need to take a trade if prices went. But that is too risky. Because by the time when prices reach, we don't know whether they come back and they violate the zone and go up. So that's why I told this point earlier, some 2 days back. Let's don't focus on this Ultratech Cement. Let us look into the other stocks. Why we should take a risk on this when we have so many other stocks are available in our list. Okay, now let us enter into our main discussion. Even though I said main discussion is on Indian Bank, but already we discussed so many other things in detail. But this is our main topic, what I want to show you something. It's a very good learning today. What is this? India Mart. Sorry, not India Mart. Ours is Bank of Baroda, not Indian Bank, Bank of Baroda. This is the one. Sorry for my mistake. Look into this Bank of Baroda. First, I will talk about the trade and then I will explain the concept. I'll show you today's trade. This is a fresh daily zone. First time prices entered into this zone. Generally, when first time prices enter into this zone, we take our entry near this zone low. We will find a 75 minute zone near to this. But we found a 75 minutes a little above. Even then, I am not using that 75 minute zone. Why I am not using that 75 minute zone? That is the main discussion for today's topic. Because you have to learn this concept. Why a zone will fail? We are in a position to tell. That knowledge I am giving you in this session. Okay, before we get into the topic, let us look into the trade. This is a 15 minutes trade. Intraday trade based on 15 minutes. So this is the one, drop, base, drop. It is looking like a base candle, right? More than, but it is a ERC candle. It is a failed ERC candle. failed ERC candles are having body less than 50% because they failed to maintain the body. I gave a detailed explanation on this in our first training video. So we have a drop, base, drop, and this is a high liquidity 15 minutes zone. That's why it is supporting multiple tests. See, this is the first one, this is the second one. Price is almost reached, but probably there could be some entry buffer they might have placed institutions at that time. But whatever the reason, and another reason could be because of this. We have a rally candle, base candle, drop candle. That way also you can think. Why institutions created? Because near this zone, because this is a high liquidity zone at 15 minutes level. Already this is a daily high liquidity zone. Inside again they created one 15 minutes. That's why it supports multiple tests. And today, see again, it gave another entry in this high liquidity 15 minute zone. Again at the last minute, last 15 minutes, it gave one more entry and see how it pushed. Every time prices are entering, it is pushing down. Prices are entering, it pushing down. Next time also it will work because it is again created. At this area, there is a rally, base and drop. So again prices come near to this. Probably I don't know they able to enter, but somewhere near. And then again it will come back. After that again, it may go a little deep inside. Such kind of possibility is there. That's why this is the 15 minutes is the high liquidity zone. We got an entry at 11 o'clock and reached the target at 11:45, 45 minutes trade. Why this is the target? Because we have a rally candle, see here, with a gap, a rally candle, and we have a base candle, and this is also looking like a base candle, but okay, it is acceptable because this size is almost same as this base candle. And next we got a rally candle. So rally, base, rally. See the first rejection from here. Today they created, institutions created this. Probably this is having a high demand and this is also a high liquidity 15 minute zone. A fight is happening between them. Either this should be broken or this should be broken. That we will see, that we will understand on Monday or Tuesday. But okay, today we got the entry. Because the distance is very less, our target is also less today. But okay, it is a good target. It has given 5,118 rupees profit it has given, which is a 3.9% return on the investment, close to 4%. Of course, it is lower than our average intraday high liquidity target, but this we got it within 1 hour time period. At 11 o'clock and 11:45 candle it reached. So almost 45 minutes duration we got this target. Okay, this is about the trade, but what is the point we should learn? For that, let me delete this. Let me delete even this high liquidity 15 minutes zone. Okay, now let's go to daily time frame and from there we will start our top down analysis. Then you will understand. Okay, before today, let me, this is till yesterday. Is it a fresh zone? Yes. If it is a fresh zone, we always select, because this is a high liquidity zone, the supply zone, we select a fresh 75 minutes inside this. So let us go to the 75 minutes. Did you identify any 75 minute zone here? Yes. We have a rally candle, we have a base candle, and we have a drop candle. So I am drawing a 75 minutes supply zone inside a daily zone. This daily zone is a high liquidity zone. But look into today, what happened? This 75 minutes zone is stopped out. It is violated. You cannot say violated, it is pierced. Why pierced? Just above we found one high liquidity 15 minute zone. Okay, is that the reason why it is violated? Maybe that could be one reason, but the other reason is something different. What I want to explain to you. What is the reason why this zone is failed? Actually, institutions cheated us by creating such kind of zones. Because we don't have proper knowledge, we believe this is a fresh zone and we take an entry. That is the way institutions are trying to fool us. Just above that, they will keep their actual zone, and because prices went above, our stop losses will be triggered. The moment stop losses are triggered, institutions, the supply just above the supply, whatever our stop losses, everything they will capture. They are cutting. The moment our stop loss, it means what we do, we will keep on exit from our trade. That means institutions got enough liquidity from us. So we are selling, they are buying. Or if you are buying, they will be selling. Okay. How institutions cheated by creating this supply zone? How to identify this supply zone does not work at all? That is what I am going to explain. This concept, not only you can apply inside the high liquidity zone, even in normal supply and demand zones also you can apply this concept, what I am going to explain. How you can identify a supply zone might fail. I am not saying it will fail. The chances, there are higher chances of failure. I am using the word higher chances of failure. That point I am explaining. Okay, you won't get clarity if you look into this 75 minutes because it looks excellent, amazing. It is a beautiful rally based drop. That is the impression it is created. But how do we know this is not a good supply zone? Because of top-down analysis. That's why top-down analysis is important. So what we are doing, go to the next time frame. That is 15 minutes. Why we are going 15 minutes? We want to fine-tune to minimize the risk. Okay, for that you identified again one rally candle, but is it a rally candle? They're all small, narrow. It looks like a rally candle, but they're all small, small candles. They're all small, small. Small candles are always NRC candles, narrow range candles. That is what I explained in the first video. I mean, first training video. So if that is the case, this is a base candle, 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 this is a medium size candle, and because it is having body more than 75%, you can consider this as a rally candle. Rally and 1, 2, 3, 4, 5 base candles. That means your 15 minutes supply zone and 5 minutes supply zone are almost same. But this leg out is not convincing at 15 minutes. 75 minutes it is convinced because this one and next one together created and you got a big drop candle. But 15 minutes it is not convincing properly. Okay, because it is not properly convincing, what we are doing? We are going one more time frame below. What is one more time frame? 5 minutes. This is 5 minutes. And the moment I go into the 5 minutes, what are you seeing? We are seeing a ERC candle, expanded range candle. Next, what is that you are seeing? A medium size leg candle. That means this is not a base candle. Next, what you are seeing? You are seeing a drop candle. Then where is the base? There is no base. But before that, look into this price action. Lot of consolidation is taking place. That means all these demand and supply, they are almost equal. And it most of the time it is weakened. Then who created this? Such kind of price action? Maybe two reasons. One is we ourselves created. That is retail traders, because of our order placement might have created this price action, and looks like there is a rally based drop at 75 minutes, or institutions might have created such kind of zone, but they didn't give any pending orders here. Maybe they want to trap us. That could be also possible. But there are higher chances for institutions might have created this trap. The reason is just before this, they kept one high liquidity 5-minute zone. This is the origin. Same thing is reflected in 15 minutes also. Now delete this, you will get clarity. From where the prices are coming? From this zone it is coming. Rally based drop here. And you get better clarity on this zone if you look into even 15 minutes also. We got a rally based drop. If you want to minimize, inside this again you can draw the zone at 5 minutes level. Let us draw both. Sorry. So let me change the time frame to 5 minutes. So we will draw one more zone inside, just a small difference for the risk management point of view. Okay, so this is a 5-minute zone, and the one a little extra zone we are getting, that is 15 minutes. The fine tuning is mainly for managing the risk, but the disadvantage with fine tuning, sometimes we may miss the entries. That is also possible. But anyway, here already one test happened. Because this is a high liquidity zone and institutions are trapping retail traders by creating a fake zone, sorry, I have drawn a little wrong way, not here. The actual order flow is from here. This is the one. This is for 5 minutes level, 15 minutes level. Here, this is the ERC candle. To minimize the risk at the entry level, this is the one, 15 minutes level. This is 5 minutes level. Actually, our stop loss should be here. See how cleverly institutions are creating these zones. So that's why what I did, because the risk is here, the stop loss is not here, the stop loss is here. Institutions cleverly kept one 15-minute zone, and just it is an intersection, this 5-minute zone. If anybody trading on the 5 minutes, if this zone is violated, what we do? Because our stop loss hit, we will exit the trade. But institution pending orders a little above that will consume all our stop loss exit orders. And that way institutions are getting enough liquidity to execute their pending orders. They are forcing us to exit from our trades because they are forcing us to make the price hit our stop losses. So that's why you need to look into 15 minutes and 5 minutes properly, and then you need to place your stop loss. Now what I did, I identified both these zones. That's why I removed this one. And moreover, this zone is identified as a high liquidity zone, this 15-minute zone. That is the reason why I didn't concentrate on the 5-minute zone, because this is already tested once. Next time also it will test. See here, this is the test we got. This is another test we got. And this is the main origin. Not only that, this is not only high liquidity zone, but this is the main origin for this entire fall. The entire fall is started from here. This failed ERC candle as a leg candle. Then you have a base candle, drop candle. See, immediately there is a first test. Second test is about to, because we deleted one 5-minute zone, that orders are executed here and pushed before reaching this 15-minute zone. Now that 15 minutes, that 5-minute zone is already tested and most of his orders are consumed. Next time prices entered into this zone, that is today. The first time. Second time went even a little above this high of this candle. Let me see here, a little above. Next time again prices go probably some more little above, and then again it will push. But already institution created one more fresh zone here at 15 minutes level. We have a rally candle, we have a base candle and a drop candle. That is what happened in high liquidity zones. Again and again institutions will create. And this is the analysis, this is the kind of analysis you have to make to understand the validity of your zone. Okay, here our concentration is not about this high liquidity zone. Once you gain knowledge, you will be able to understand. But the question is, the 75-minute zone, how we identified in advance, it is going to fail. That is our main discussion. We identified this 75-minute zone will fail. The 75-minute supply zone. How we identified? We went to a 15 minutes, and inside the 15 minutes we went to 5 minutes. There we didn't find any supply. That means there is no supply at the lower time frame, but a higher time frame zone is created. All these factors clearly tell the prices will easily pass through. That is what happened today. How easily? Maybe there could be some pending orders, but the number is very less. Or maybe those pending orders are not really institutional pending orders. Maybe they are the orders placed by the retail traders. Because all our orders are executed, hit the stop loss at this point, institutions, whatever the 5-minute zone, they kept just above that. Actually, that is a bear trap. That concept is also called as bear trap. Their bear trap consumed all our orders. Which orders? The short we exited. The short we executed means we are buying. First we sold and then we are buying. We are buying, but institutions are selling. Why we are buying? Because our stop loss is hit in the supply zone. But if you know this concept, which concept? There is no real supply inside this 75-minute zone. If you know this concept, do you place an order in this 75 minutes? No, we never keep an order in this 75 minutes. But who will keep these orders in this 75 minutes? Those demand and supply zone traders who land a fresh zone is always a valid. Because it is fresh, we can buy if it is a demand zone, or we can sell or short trades if it is a supply zone. Those who land these points, they will keep their orders here. Okay, those who are following high liquidity zone concepts, whatever the strategy I explained, even yesterday video also I gave a detailed explanation. Who followed that strategy, and they might be thinking this is a fresh 75-minute zone. Now we can take a trade in this zone. Those people also probably you got a stop loss hit today. But every time I am suggesting one point. Don't trade directly in the 75 minutes. You have to minimize your risk. For that, go to 15 minutes inside this 75 minutes or 5 minutes inside this 75 minutes and fine tune the zone, and then you take the trade. You have to do top down analysis. That is what I've been telling. If you would have followed these points, whatever I suggested earlier, definitely you would not have found a 5 minutes supply zone inside this. And you have seen a pivot inside this. What is pivot? You have a rally candle and then drop candle without base. Or you have a drop candle and a rally candle without a base. That is called pivot. We are calling it as a pivot. If you see some kind of pivot, immediately you have to understand there is no institutional action here related to demand and supply zone. Then immediately you alert yourself and you don't take trade. That is what I explained in this video, in this approach. So that's why it is a very, very important concept. We all must learn this concept. This concept not only helps you for trading related to high liquidity zones, this concept also will help you, those who are trading as per your normal supply and demand zone concepts. This concept clearly told you when a zone will fail, a demand zone or supply zone. If you don't find the origin of the actual institutional, by the time you might have understand what exactly I meant for origin. At lower time frame, you should find the real origin of a demand or supply at 5 minutes level or 15 minutes level. 15 minutes also we didn't find because the 15 minutes and 75 minutes almost exactly looking similar. Except one thing, 15 minutes, the leg out candle is not convincing. Even 5 minutes we got the clarity. We found a pivot instead of a zone. So those points you should see. I am telling these points again and again because I want you people really focus on this. First time when I am explaining, probably you may not concentrate properly. That's why I am repeating these important points even third time, fourth time. Maybe it may prolong the discussion, but it's worth in repeating. There is nothing wrong listening such an important points, because these kind of points will save your money. Unnecessarily your trades won't be stopped out. Those people who have taken trade in this zone without knowing these points, your trade would have been stopped out today. Your stop loss might have been triggered somewhere here. So that's why, if possible, repeat this discussion, especially the Bank of Baroda, whenever I started, repeat second time or third time, there is nothing wrong. Such kind of concepts only going to save your money. This is not only for learning the subject, it is also how to save your money. Such an important concept it is. After doing so much of research, I am able to identify all these kind of points. Because while developing the algorithms, I have to analyze so many scenarios. That helped me to understand all these in detail things. That helped me to understand how institutions' mindset. Because I have to develop my algorithms according to the institution's mindset, according to their way of thinking. The goal when I developed this software is at least my software should give 90% accurate level. Okay, I'm talking to the public. Public will laugh 90% how it is possible. That's why all these days I'm telling 80% success rate for high liquidity. But have you seen any failures for the last 1.5 months? Even today also it looks like a failure. Those who did not land, this supply zone is stopped out. Without doing top-down analysis, we can easily tell, yes, the supply zone is stopped out. So we got one failure in our high liquidity zone. But actually we would not have taken an entry at all in this zone. That point you have to observe. Because it is a trap zone. There we didn't find the origin of the actual move. The origin you will identify at lower time frames like 15 minutes or 5 minutes. Who knows, sometimes it could be at 2 minutes or 1 minute level also. That is also possible. So this is about our analysis related discussion. Now it's time to generate our demand and supply zones. So I will start with the weekly zones. After that I will generate daily zones. So our weekly time frame is our weekly candle opened on 30th October and closed on 3rd. Opened on 30th and closed on 3rd. So I'm selecting the entry time frame as a weekly. And let us find the stocks which are near to the weekly demand zone. So only one stock is filtered which is near to the weekly demand zone, but this is already a Pierce zone. So let's go back. Entry time frame weekly. Let us find the stocks which are near to the weekly supply zone. So good number of stocks are there. Even Nifty 50 is at weekly supply zone. Nifty Bank is also at near to the weekly supply zone. Nifty Healthcare Index, Nifty Public Sector Bank. Nifty 50 is enough to change the market dynamics, right? So anyway, now it is entering near to the weekly, which is a fresh supply zone, weekly supply zone. And what kind of supply zone? High liquidity supply zone, a counter trend setup related. Even Nifty Bank is also a high liquidity zone. It is a resistance supply zone, a fresh zone. So we should be careful. And next week is going to be very interesting. Now the question is again, is this, now market is moving up. Now again these supply zones are having the capacity to change the direction to down direction. So these points you need to observe from this. The total 19 stocks are near to the weekly supply zones. So let's go back. Entry time frame is weekly. Let us find the stocks which are near to the, which are closed inside weekly demand zone. Stocks closed inside weekly demand zone. We have a good list. Indices, Nifty Financial Services, Nifty IT, Nifty Metal, Nifty Private Bank, Nifty Next 50, all are closed inside the weekly demand zones. So total 45 stocks are filtered where price closed inside weekly demand zone. Let's go back. Entry time frame is weekly. Let us find the stocks where price closed inside weekly supply zone. So this is the filtered list. So total 30 stocks are closed inside the weekly supply zone. So let's go back. Entry time frame weekly. Let us find the tested zones. So the tested weekly demand zones. So total 9 stocks are tested during this week. Let's go back. For entry time frame weekly, let us find the tested weekly supply zones. So 10 weekly supply zones are tested during this week. Now let us find newly created weekly demand zones and supply zones. Entry time frame weekly, let us find the newly created weekly demand zones during this week. So these 6 stocks are having newly created weekly demand zones. So let's go back. For entry time frame weekly, let us find the newly created weekly supply zones. So these 8 stocks are having newly created supply zones. So this is about the filtered list. Now I am generating demand and supply zones for all the indices and stocks listed in F&O segment. I mean equity stocks listed in F&O segment. So entry time frame is weekly, and this is the complete list. I keep on scrolling this list. So whichever the stock you want to refer, there you pause the video and study the parameters. Maybe I will be giving only some 3 to 4 seconds while scrolling page by page. So this is the end of the end of the weekly report. Now let's move on to the daily time frame. So let us generate demand and supply zones for the daily time frame. So entry time frame is daily. Let us find the stocks near to the daily demand zone. So these 6 stocks are near to the daily demand zone. So we have any high liquidity demand zones? HDFCAMC again. IndusInd Bank. But we don't look into this because it is already pierced 3 times. That's it. So let's go back. Entry time frame daily. Let us find the stocks which are near to the daily supply zone. These 8 stocks are near to the daily supply zone. Balakrishna Industries, but we already discussed it doesn't have any fresh zones. So it may not be useful to us. IOC already tested. So you need to analyze and you need to find any fresh 75 minutes with good structure is available. Now onwards I am going to use the word good structure, because I already explained in today's session why a 75-minute zone is failed, because the structure is not good. Why we are saying structure is not good? Because it doesn't have any origin where the actual supply is generated. So that level analysis you have to do from now onwards. See, I'm sharing each and every point from my experience. You have to properly understand all these points. If you have any doubts, put them in the comment section. If anything is required, ask me. Again, I will explain. I don't mind to explain second time, third time, fourth time, even 100 times I'm ready to explain. But you have to ask me. Otherwise, I don't know your requirements. So let's go back. Entry time frame daily. Let us find the stocks which are closed inside daily demand zone. So total 17 stocks are filtered, where price closed inside daily demand zone. So this is the filtered list, and let's go back. Entry time frame daily. Let us find the stocks which are near to the daily supply zone. So this is the filtered list. So good number of stocks are closed inside the daily supply zone. Even Nifty 80, Nifty Metal, Nifty Next 50. Let me scroll down. So total 52 stocks are price closed inside their daily supply zones. Okay, let's go back. Entry time frame is daily. Let us find the tested daily demand zones. So these 4 stocks are tested. Let's go back. Entry time frame is daily. Let us find the tested supply zones, daily supply zones. This is the filtered list. So total 34 stocks are tested, the daily supply zones. Let's go back. Entry time frame daily. Let us find newly created daily demand zones. So these stocks are having newly created daily demand zones. So total 23 demand zones created. 23 daily demand zones. So let's go back. Entry time frame daily. Let us find newly created supply zones, daily supply zones. Only 4 supply zones are created today, the daily supply zones. So this is about the filter list. Now I'm generating demand and supply zones for the daily time frame without any filters. Entry time frame daily. So this is the complete list. I will keep on scrolling this list down. Wherever you want to refer or whichever the stock you want to refer, there you pause the video. I will give few seconds time each time I scroll down. So this is about the complete list for daily time frames. So this is the end of the list for daily supply and demand zones. Now I will generate supply demand zone chain for both weekly time frame as well as daily time frame, because we have a weekly list also today. First, let me start with Nifty 50. Nifty 50. And entry time frame, first I am selecting weekly and generating the supply demand zone chain. SDZ means supply demand zone chain. So these are the weekly zones. I am not giving any commentary now because already explained these things earlier videos. If anybody first time looking into this chain and if you want to understand how to make use of this chain, I already gave a detailed discussion about how to use this supply demand zone chain. It is there in the playlist supply demand zone chain. Go to NeoStock YouTube homepage and scroll down. I think the last playlist is a supply demand zone chain. And find the video. I have given a detailed explanation for Nifty 50. So let me go back. Now I am selecting the entry time frame as a daily and generating the supply demand zone chain for daily time frame. You have two supply zones and remaining all are demand zones on daily time frame. So this is about Nifty 50. Now let us generate supply demand zone chain for Nifty Bank, that is Bank Nifty. So let me start with weekly time frame. I'm generating the chain. Weekly, first one is the supply zone, remaining all are demand zones. So let's go back. Now I am changing the time frame to daily. So let me generate the chain. This is for Nifty Bank or Bank Nifty. So first four or five, first five are supply zones, and the sixth one onwards demand zones. So this is about supply and demand zone chain for both Nifty 50 and Nifty Bank, that is Bank Nifty. I hope this information is useful to you. Let us all meet again in our next video. Thank you.